Corn sunk to start the week while feeder cattle futures soared. AgDay's Michelle Rook is back with this analysis in Markets Now.
Corn lower on Monday, but we did have soybeans and cattle to the plus side. John Payne with Advanced Trading is here to break it down. Okay, let's talk about soybeans higher on Monday. Was that all weather premium being put in that market?
Well, I think the heat you certainly have to kind of keep an eye on. And I drove down to Central Illinois this week, and you can really see the crop is ahead in those parts of the country. And I think that any type of threat we have here certainly isn't priced in given the price action. And also in soybeans, we don't have to carry in. So the amount of supply that's available to be sold this very second it's not the case like it is in corn and wheat where we had these supplies that were brought in from the year prior. It's not that case in beans. So the market's going to get its soybeans here in a couple of weeks, a couple of months. I don't think we have a whole lot of upside here, but I think that the market has probably done enough work to the downside. Crush margins are really good.
So new contract lows in both corn and wheat, and most of that was just first notice day pressure, you think?
I think so. I think you had options go in the books last week, a lot of new shorts coming in, and I think there's a recipe here to see a lot of folks buy back hedges as grain gets delivered, or simply you just get cheap enough. And I think we've been seeing that today. It's pretty active call buying from what I've heard from folks up north that are looking to protect crop insurance prices.
And cattle did manage to close higher. How impressed were you with that, John, considering we had a bearish cattle on feed report placement number?
Well, it's certainly helpful. I don't think that you're going to bury this market with a supply number like that. This is an overall supply picture that's very tight. Beef prices are up. That has a lot to do with the economy doing well. And yes, we're seeing slowing, but wages are still up and folks are still eating. And I think there's a substantial upside to the cattle market next spring. I think in the short run, I'd be a little careful with it. But looking at that June contract for April for 2025, if you're a buyer, that might be a decent spot to jump in.
You think that cattle are trying to form a bottom, or are we getting close?
That's a little more bullish in my opinion, in the sense that those supplies just aren't there, and we're not seeing the heifer retention that I think is pointing towards more supply in 2025. So I think if beef prices can stay up at these levels, we'll see cattle survive regardless of what the placements and the marketing numbers are.
John Payne with Advanced Trading, thanks for joining us. We'll have more AgDay coming up. Watch Markets Now with Michelle Rook on the Farm Journal YouTube channel, keeping you updated throughout the day on the markets at the open, midday, and close. Find out what moved the markets today and what to expect the market to do next.